All right, good evening, everybody, and welcome back to Walks on Wall Street. Today is March 14th, 2023. It is roughly 8:46 p.m. Eastern Time here in New York, and it is also Pi Day. So happy Pi Day for all of those who celebrate, all of our math fans out there. So that's cool. Today on the stream, we're going to be talking about the CPI report that came out. So the Bureau of Labor Statistics released the Consumer Price Index today, right before the open at 8:30, and it actually came in line with analyst expectations. So the vast majority of analysts on Wall Street were expecting about a 6% increase in CPI, and that's exactly what we got. So tonight we're going to be breaking down that report. If you want, let me do this actually before we get started, just so we're looking at the same piece of data, because we're going to be doing a deep dive into this. I'm going to post in the chat, and you guys should be able to see it right now. This is bls.gov. It's going to take you to the actual press release where you can read through the report, the CPI report, right along with me. Now, if you scroll down about a quarter of a way down the page, you'll see Section A, Table A, okay? And that is going to disclose the percentage changes in CPI for all urban consumers, and this is a U.S. city average, obviously. So you're going to be able to see the month-over-month increase from August of 2022 to February 2023, which is where we are now. And then you'll also see the unadjusted 12-month ended in February 2023, all the way on the right. So on a month-over-month basis, CPI went up 0.4%. That compares to about a 0.5% increase in January. So if we think about month-over-month and year-over-year, did we see some slight deceleration? Yeah, I think you could say that. But, as I've said many times on the stream, and we've been talking about this a lot, the main areas of contribution in my eyes are still a very, very large area of concern, because if you look at food and if you look at shelter, in my view, these are the two most critical areas as it relates to the average American consumer. And I'm just speaking from my personal experience, right? If I showed you guys my Amex statement, or I showed you, my personal spending, I spend the most on food and I spend the most on shelter. And I think that could be said for the vast majority of people here. And as it states in the CPI report, shelter was the largest contributor yet again, accounting for almost 70% of the entire increase. Now, if we look at core CPI, this is excluding volatile food and energy. Now, as we think about the Federal Reserve and Fed Chair Jerome Powell actually favors core CPI a little bit more than the headline number. Core actually rose about 0.5% in February, as opposed to 0.4% in January. So we're actually seeing month-over-month acceleration on the core side, and year-over-year for core CPI, excluding food and energy, we had about a 5.5% increase. Before we get started, guys, let's take a quick look at the S&P 500, the Dow Jones Industrial Average, and the NASDAQ. So this is the second trading day of the week. Obviously, today is Tuesday. So this is the second full trading day after the big bailout program was put in place. And I'd just like to remind everybody that two of the major equity indices, the Dow and the S&P 500, are still trading below all three major moving averages. Okay, that includes the 50-day moving average, the 100-day, and the 200-day. So even though we had about 2 days of a broad-based rally on Wall Street, it's very important to note that we are not yet back above that 200-day moving average, which would signal a lot of bullish sentiment in the market. However, if you look at the NASDAQ composite, that indice is the only one who have managed to rally back above those key moving averages. Now, you may be wondering why. Why would the NASDAQ, of all those indices, be rallying the most? And I think you have to look at the bond market for that. So if you look at cnbc.com /bonds, just take a look at the yield curve. We've had an amazing move, monster move in yields across the entire curve. I mean, interest rates have really come down. If you take a look at that 1-year Treasury, just a couple days ago, guys, we were talking about the 1-year Treasury yielding above 5%. It's at 4.639% as of recording this video. And as we know, a lot of tech stocks actually tend to perform better in an environment where rates are low. So that's all I got for you guys today. We're going to head out. I think we're going to try to make our way to the Upper West Side. Please God, the internet connection will be good up there. It is snowing a little bit, but not to worry. The snow is better than the rain. I mean, we got absolutely soaked last night. So hopefully things will be a little bit better tonight. Let's say hello to all of our friends in the chat. Edward Adams, Fred X, Gary Carpenter, welcome, welcome. Riley is here. I see John Abraham, welcome. Otto, Austin City Limits, Susan Wolin, Mimi is here, Lou T, Gigi NYC, Ryan Beck, TC, good to see you guys. So let's head downstairs. Let's head out into the city. A lot to talk about tonight. Hey, Gregory is here also, says good evening all, and R. Rafed says evening Tom, welcome. We'll head down to the ground floor. But some pretty significant movements in the debt market we'll talk about. Hey, username, good to see you. Welcome. Okay, we are headed out. So we're going to be hopefully going to the Upper West Side if the internet holds up. And now we are officially ground floor, guys. This is 6th Avenue and West 57th Street. This is New York City's Billionaires Row. Let's see if it's snowing out. Let's see. So the building that we're looking at right here is the brand new Steinway building. Some also call it the Stairway to Heaven building as well. If you look closely, you can see some snowflakes coming down. But I think we have another case where, the media and the weather people were sort of hyping up the storm because, pretty much the vast majority of the rain and the weather came last night. I mean, it was teeming raining while we were live streaming. But tonight's actually pretty mild, pretty calm. I mean, the wind is blowing if you kind of look at the flags over there at the business school. But very light snow, light flurries. Here, once again, we have Central Park Tower, 220 Central Park South, and then my personal favorite, which kicked off the entire trend of Billionaires Row, 157. So 157 and Central Park Tower were both developed by the Extel Group, and they are amazing, amazing buildings. Hey, Lemonade is here. Welcome. Good to see you. Golden City says, hey, Tom, how you doing? I'm doing really good. And GGNYC says, come on over to the Upper West Side. Well, that's where we're headed. We tried to do that a couple weeks ago, but for some reason the internet connection wasn't good, so we'll try that out tonight. Oh, before I get started, everybody, did anybody see the CNBC interview today with Carl Icahn? Now, I thought it was a pretty good interview. I always, very seldom do I sit and watch CNBC. However, when there's a select few, I would say, notable investors, one of which being Carl Icahn, I always make time to watch. So Carl Icahn was interviewed, I think it was right towards the closing bell. I think there was about 30 minutes to go in the trading day. And he was sort of talking about this whole situation that happened. But I think one of the more interesting questions that Scott had asked Carl Icahn, is what he thinks about Ken Griffin from Citadel Securities, his statement about the bailout, and we could argue semantics over if it's a bailout or if it's not. I think for the sake of time, we'll just call it a bailout. So anyway, Scott, the host on CNBC, was asking Carl Icahn about the statement that was made by Ken Griffin's, or Citadel's Ken Griffin, about how American capitalism is crumbling beneath our feet or in front of our eyes because we decided to bail out the depositors. And I think I agree with the majority of what Carl Icahn said, but I think this situation was very unique in which we bailed out the depositors, because yes, it is true, right? And we're talking about Silicon Valley Bank. True, the Treasury and the Federal Reserve come in here and backstop the depositors. What would have happened is the vast majority of people probably would have gotten about 75 to 80% of their money back anyway, I think. And I think everybody knows that and understands that, but that's really not the problem. The problem was the confidence problem, right? And as we've talked about over the past couple days here on the live stream, in a fiat currency system, excuse me, my microphone fell off. In a fiat currency system and a fractional reserve banking system, it's all a confidence game. Let me put my mic back on. Sorry about that. I think the audio should be good now. But in a fiat currency system, it's all a confidence game. And if the average American saw on the news on Monday morning that depositors weren't going to get all their money back, and they may get 70% or something like that of their money back, I believe, it is in my opinion, right, and we may disagree, this is Central Park Tower in front of us, by the way, gorgeous building. I think that would have caused an unwarranted classic bank run at other regional banks, because people would have said, hey, I mean, if these big shots over at Silicon Valley Bank lost 70% of their money, well, what does that mean for me and my bank? I'm not some big VC in Silicon Valley. These guys are supposed to be smart, and I think it would have freaked the hell out of a lot of people. So I'm sort of torn on the issue. I think it was the right thing to backstop the depositors in order for us to provide stability and trust in the American banking system. But if you guys want to watch that interview, I think you're going to find real value in it. If you type !icon in the chat, once again, !icon, so as it's spelled, Carl Icahn, billionaire investor, the Nightbot will actually drop the link for you guys to watch that CNBC interview. Mimi says, yes, it would have. It is so true. Good to see you, Mimi. Ryan Beck says the 50K shares he bought didn't hurt either. So, Ryan, I'm guessing you're talking about the CEO of Charles Schwab. I saw that too, and I think that, in my opinion, and we'll talk about this a little bit because I think it's so important, it's such big news. I mean, that shows to me leadership, in my opinion, right? What didn't show leadership, in my view, is you have a CEO of a major bank, right, Silicon Valley Bank, and you see the CEO selling stock 2 days before the collapse. You see the vast majority of the C-suite dumping their stock 2 days before the collapse. To me, that doesn't show leadership and maturity. That shows cowardice, and it shows that you really don't care about your customers. So I think I think there's a clear distinction to be made there. To Ryan Beck's point, Charles Schwab. I think the CEO of Charles Schwab actually made a brief appearance on CNBC. There was some breaking news that he did buy shares of his own stock to sort of instill confidence, and I believe, and I can't really verify this, I was so caught up today, but I think the CEO actually came out and said that there was significant money flows into Charles Schwab. Can anybody confirm that? Yeah, Ryan Beck says, yeah, Tom, spot on, Schwab CEO. No, not Icon like I-C-O-N, Icon as in Carl Icahn, so the spelling of his last name. Oh, Ryan Bex is confirmed. Yeah, I mean, look, I think, and I told you guys this before, I was on a really interesting Twitter space. Man, the wind is so brutal tonight. I was on a really interesting Twitter space the other day with the former CEO of, I believe it was HSBC during the financial crisis, and he said the same exact thing. He said, look, I got to tell you guys, he's like, I'm an old Wall Street banker, from the days of Salomon Brothers. And he actually said the same exact thing as I'm saying. He's like, look, real Wall Street CEOs used to show leadership and stand by their customers and sort of go down with the ship, so to speak, not bail on it and sort of leave your customers holding the bag. So I think just in terms of, a moral lapse and an ethical lapse potentially, I'm a little disappointed in that. So to have other CEOs of big broker dealers and banks come out to even just try to calm the waters and purchase their own stock, I think that shows the exact opposite. I think that shows a little bit of maturity there. Team, we are now coming up at Columbus Circle. The building we have right in front of us is the Trump International Hotel and Tower. Let me read some of the chats. Hey, Bree Grams is here. Good to see you, Bree. Happy Tuesday to you. P.T. Smith says if the bank was not a Democrat Party bank. Yeah, I mean, I don't really want to get into the the politics of it. And I sort of explained this to my friend the other day. So on Thursday, Friday, and Saturday, that is when the solutions were created. So now that the solution is put in place, this is just going to be nonstop barrage of political arguments and finger pointing. And quite frankly, I think that's a waste of my time. And I'm not trying to say that I'm better than anybody else, but I am very, very, I value my time quite a bit. So I think and watch, I'll predict this, over the next coming months, there's going to be no talk of solutions. It's just going to be, this is all Joe Biden's fault. This is all Donald Trump's fault. This is the wokeness, the woke bank. This is, Trump. He caused this. And it's just going to be a big political psyop. And if I had any advice to give, I would totally bail out of that conversation because it's all to deceive the public in order to win votes either way. Hey, Chris Tompkins is here. Says, look at the assets. Met liabilities once FDIC set in. No one was bailed out. Yeah, I mean, Chris Tompkins, you're right. You're correct. Sabrina Ferris here, welcome. Keith saw that HSBC bought the UK subsidiary. Yeah, for £1. I saw that too. So that equates, and Keith, it's so reminiscent, right? There's an old saying that history doesn't necessarily tend to repeat itself, but it definitely does rhyme. At least I think that's how the old saying goes. And we were talking about almost a decade ago to the date. This is when Bear Stearns, right, the CEO of Bear Stearns, I believe he came out on CNBC, or it may have been Bloomberg, I forget. Obviously, I wasn't really old enough to live that moment, but I've studied it. The CEO of Bear Stearns came out and assured everybody that there was no liquidity crisis, that the bank wasn't insolvent, that they would be fine. It turns out that 4 days later, you fast forward, and JP Morgan Chase is taking them over for, I believe it was $4, or maybe it was $2 a share. So it's interesting to see that, HSBC takes over the UK arm, or the subsidiary of Silicon Valley Bank, for £1, which I think loosely translates to $1.25. Pretty interesting and very reminiscent of times past for sure. Before we head up to the Upper West Side, I want to give everybody a quick view of Billionaires Row. Obviously, you have Central Park Tower in the back of 220 Central Park South. We briefly talked about that Carl Icahn interview on CNBC because Ken Griffin's Citadel's Ken Griffin said that this is American capitalism collapsing before our eyes. He actually owns one of the units here at 220 Central Park South. Then you have 157, and then a gorgeous Steinway building, or the Stairway to Heaven building here. But today we're mainly going to focus on the CPI report. So the Bureau of Labor Statistics, everybody, did release their inflation data. Now, it did come in line with the vast majority of analysts' expectations, so you could call that consensus on a year-over-year basis. And we're talking about the headline number here. On a year-over-year basis, man, I got to put up my hood. Give me 1 minute. It's so cold out and it's so windy. Give me 2 seconds. Apologize here. I'd rather have it cold than rainy, though. So that's a plus. Anyway, what were we saying? Man, that guy came in like a wrecking ball there on the food delivery bike. So inflation, as we're talking about core inflation, headline inflation for a second, that came in at about 6% on a per annum basis, so year over year. But month over month inflation rose 0.4%. Now, looking at this face value, you would think, okay, well, we're having some material improvements in inflation and things are sort of going the right way. But I have a very, very big concern. And we've talked about this, every single month. We've been covering these CPI reports for every month. Oh man, that wind is crazy. It seems as if the categories that are most important to the average everyday American, such as shelter and food, are really the only two categories that we're really not seeing much improvement in. So 70%, okay, the largest contributor to the increase in CPI this month, or I should say February, about 70% of that was shelter costs. So, again, you could spin the narrative any way you want, right? If you look at the individual categories, yes, we had some very, very good improvement as it relates to used vehicles, used cars, and used trucks. That was down significantly. But I think the categories that really matter most, it's becoming ingrained into the economy, which is definitely a big risk. So this is 61st Street, headed uptown. Hey, Two Wheel Freedom, what's up? This is Tom. It's up 6% from February 2022. It's up 14.37% from February 21 as a base. Danny is here. Welcome. Hang with Mark says, I'm in Florida right now, Tom. It's 66 degrees. Wow. Yeah, I'm definitely a little bit jealous of that. It's crazy how we were doing these live streams just 2 weeks ago in Miami, and it was 86 degrees every day I was there. Definitely, the short guy says, yo, Tom, your audio is too loud. I apologize for that. Let me see. I'll try to fix it as we go here. It's probably because the wind is blowing the microphone into... I don't know. I'll try to fix it, I promise. Let me read some of the chats here. Wow, the Weather Channel is recording right next to us. I did not know that. Fantastic. All right, let me try to fix that. Give me 2 seconds. Let me try to fix the audio. Okay, hopefully that does it. It is quite windy, so maybe that's what's causing the cracking. But if you guys want to see the CPI report for yourself, you could type !CPI in the chat, and it will drop the link to the Bureau of Labor Statistics CPI report. Now, I think what's most important, right, is this going to materially impact monetary policy decision coming up in the next week here? Because on Wednesday, that is the next FOMC meeting, and before this whole Silicon Valley Bank collapse, the consensus, or I would say leaning consensus, there was about a 50% probability that we were going to have a 50 basis point rate hike. But now, obviously, since we've had a major cataclysmic collapse in the banking sector and the Federal Reserve had to step in, you could almost call this quantitative easing in a way. Some major investment banks are actually calling for a rate cut. So Nomura actually came out and said that they expect a 25 basis point rate cut next week. Now, I can't say I agree with that. And in my view, and again, this is just my personal opinion, I could be wrong, but if the Fed actually comes out here and cuts interest rates by 25 basis points, I think that would cause utter pandemonium and shock to the system. And again, this goes back to my point about, the banking system being essentially held up by trust and hope in the system, right? And if you have the Federal Reserve backstopping depositors, and then you have the President of the United States coming out on Monday morning assuring the average American that the deposits will be safe in the banking system, well, people are sort of calm now. I'm not going to say they're 100% calm, but they're at least a lot more calm than they were from over the weekend. If you have the Fed come out and say, you know what, guys, we're going to cut rates by 25 basis points, assuming Nomura is right, which I don't think they are right, the average investor, or the market, I should say, is going to be freaked out. They're going to be like, whoa, what does the Federal Reserve know that we don't know? I thought this fix was going to provide stability to the banking system. Apparently, that's not the stability we need if the Fed thinks that we need to cut by 25 basis points. I think that's actually going to freak a lot of people out. I think what would surprisingly provide more stability and confidence is if the Federal Reserve carries on with quantitative tightening business as usual. So I really, really hope yeah, I'm just getting distracted by the chat. I don't know if there's anything I could do with the sound, guys. I really don't. It's just so windy. It may not seem windy on the stream, but it's like 30-mile-an-hour winds, and it's blowing me all over the place. So we're just going to have to deal with it. I apologize. But, if they raise 25 basis points, I think the market is actually going to receive that well. To say that, listen, this fix, it would signal that the market is confident that the Fed, or it would signal that the Fed is confident that their lending operations will really fix the problem. And I'm relating to the banking sector, but I think an emergency rate cut may spark additional pandemonium, but we'll see. All right, guys, this is the beautiful Lincoln Center. I'm actually really glad we came up this way because we haven't been up this way in a long, long time. And I think the fountain is actually turned on, so maybe we'll cross the street and go over there. Hey, Western Mass Dave is here. Good to see you, Western Mass Dave. Appreciate you. Thanks for joining us. Yeah, Michael Joseph says inflation numbers were mixed. Inflation is still very sticky, key metric. Yeah, I mean, well, the thing is, and this, I always go back to this, right? Now, I would like to disclose this. This is the second CPI report where they've changed the calculation, right? So I think we need to keep that in mind. So shelter costs makes up a larger percentage of CPI. Now, this could, in a way, be very positive for the perception, and notice how I'm using the term perception, of inflation going over the next couple of months here, Because all of the leading economic indicators, everybody, do suggest that we are going to get a price decline in real estate and rents should drop. Now, today, I would like to mention that a major home builder that is based out of Miami, Florida, Lennar, so ticker symbol LEN, did report earnings today. Now, the conference call is scheduled for tomorrow at 11 a.m. Eastern time. So I was going to do a deep dive into that earnings report today. I would highly suggest everybody read the press release for their earnings, because there's so much amazing data in there about the new home sales market. So if you type !LEN, once again, !LEN in the chat, I actually programmed the Nightbot to give you guys the earnings press release. And I would encourage you guys to actually go through the press release and read some of the comments that the CEO made. And if you're following me on Twitter, if you want to follow @WalksWallStreet, I actually tweeted out some of the most notable statements from management. And I think you guys would be pretty surprised with what they said. Very surprised that they still have the fountain on here and Lincoln Center. It sounds beautiful. Yeah, Zozo Bob says housing market buyer confidence rose for 2 months now despite higher interest rates. Now, the most interesting thing is this. So, we've been talking about my thesis, and I think many of us agree here, that our view is that prices are going to start to come down in the housing market. And the CEO wrote in the press release, or he made a statement, that margins declined by 570 basis points last quarter. Now, usually home builders, I think Lennar, I don't know the exact number, but I think they usually have about 25 to 27% margins on the business. So the statement he made about that margin compression, and we've been really focusing on this, right? We've been saying, look, as interest rates go up and as inflation goes up simultaneously with inflation, I think one of the biggest problems that we're going to see in a lot of these earnings reports is margin compression. And we're starting to see that in the home builder sector. And the reason why margins are compressing there, according to the CEO, if you want to read the statement, again, !LEN in the chat, is because they are starting to reprice their real estate and get very aggressive to not only close new deals, but to keep the deals that they've already done from canceling, right? So if I'm the CEO of a company, right, and you got to understand, new home builders, it's not like existing home sales, right, where you're dealing with 50 million different people that are selling individual properties. You're dealing with a company that is building homes and managing their inventory. So in order to move product and encourage customers to get deals done, they can come up with a lot more creative things than, let's just say, a single existing home owner can. Does that make sense? So they can get creative. They can do price cuts. They can give discounts on warranties. They could even pay down points on a mortgage to get deals done, in addition to keep those deals that were already in the process of closing from canceling. So I think you're going to continue to see that trend, because it really wasn't a bad quarter. If you look at the quarter, it wasn't that bad of a quarter. But you're seeing every single quarter a trend develop to where we're shifting from a seller's market to a buyer's market. So judging by this fact, if you guys are in the market, let's say if somebody's in the market to buy a home, you're a first-time home buyer, you should be paying very close attention. And we're going to head uptown now. We're going to head into the Upper West Side. I think we're going to go all the way up to the Dakota Apartments. That is the very famous building, Beatles, John Lennon. But you should be paying very close attention to all of the earnings reports for home builders. Like, you should be watching this like a hawk, because management is literally telling you that they're flexible on pricing. They're literally telegraphing that to the market to say, look, we have inventory, we want to move it, and we're willing to give up some of our margin in order to move that product. So you as a buyer, oh, look at this dog. You as a buyer should be taking that to your advantage and negotiating like holy hell to get a good deal. Hey, Randy the Machine says, my house here in Florida, after going down about 5 to 7%, has regained more than half back in the last week. Interesting. I guess you're looking at those Zestimates on Zillow. I try really not to look at those, but hey, Frank is here. Says, good evening, Tom from Nashville. Welcome, Frank. Thank you for being here. Oh, Clarence Jackson says, I see you outside my window. Oh, yeah, you told me you lived around here. Very jealous about that, by the way. This is one of my favorite neighborhoods in all of New York. Right here, Lincoln Center, 59th Street, Columbus Circle, gorgeous, gorgeous neighborhood. But anyway, the reason why I sort of tied in the home builder earnings report today, again, Lennar, ticker symbol LEN, with the CPI report, is because shelter costs actually increased on a month-over-month basis and a year-over-year basis. But again, this is lagging data, right? So you can have lagging economic indicators, you could have coincident economic indicators, and then you could have leading economic indicators, right? We don't want to look out of the rear view mirror, okay? We want to look out of the windshield, okay? You know, we were trying not to get in an accident here. We're looking forward. So if we know that many of these home builder CEOs, CFOs in the C-suite is willing to, you know, have margin erosion in order to do deals, well, where do you think the average sales price of those new homes are going? Well, they're probably going down. And we know this for a fact because, again, if you look at that press release that came out today, the average home price at Lennar went down on a quarter-over-quarter basis. So I think the good news here, guys, is that shelter costs are probably going to start to decline. And now with the new calculation with CPI, where shelter costs makes up an even larger percentage of CPI, once the housing market really starts to gain steam and roll over here, you know, you could see drastic declines in CPI. I don't know, any thoughts there? And also any input maybe in your neighborhood. If you're starting to see rents come down, if you're starting to see home prices come down, I think it would be very, very insightful to the audience for you to put that in. Hey, Western Mass Dave, good to see you. As always, we'll welcome some good news, Tom. Yeah, we definitely need we definitely need good news, Dave, in times like this. It's been a wild couple days, let's just say that. Hey, Mike sees his home prices in Central Florida seem to be holding their own. You know, Mike, there was some data out of Redfin the other day, and the only market that is actually up and actually seeing price gains month over month is Miami-Fort Lauderdale, which is, I'm actually quite surprised at that resiliency myself. Very surprised. Wendy England's last sale I heard was over $40K over asking. Jeez. Well, Wendy England, you're in Canada, right? If I'm not mistaken. Yeah, guys, if you think the housing market here in America is crazy, I mean, I tip my hat to our Canadian friends. This is ABC 7 right here. We'll walk up this street. Stuart Evans is here. Welcome. Randy the Machine, nothing but waterfront for sale in my area, says Randy. Charles D says margin erosion. How long do you expect that to last? Well, I think in the home builder sector, it may last a while. And here's the big head scratcher, right? And we've talked about this before. Home builders across the board are actually holding up very, very well over the course of the last couple quarters. I mean, they're one of the leading sectors in the market. right? You look at Toll Brothers, DHI, all of them pretty much are leading this market. Now, you know how I always say the market is always right? This is interesting, guys, because check this out. Let's change up gears here and start to talk about the bond market, right? Look at the action in the bond market. I mean, obviously, over the past 2 days, I've honestly never seen anything like it. Absolutely ridiculous. You know, we were just talking about a 1-year treasury yielding over 5%. I mean, talk about a collapse. Now, obviously, this is due to, the bank run and people, getting all scared and, flight to safety into treasuries and things like that. So I don't know if this will reverse course. I tend to think it will, and I think yields will continue to go up. But according to CNBC, the average 30-year fixed rate mortgage as of today is back below 7%. I think the exact number is 6.8%, I believe, on the average 30-year fixed, or 6.75%. I mean, that's a 25 basis point move in less than 3 days. So, again, going back to, is the market always right? Is the market predicting that maybe this could potentially be a top in rates, and we start to roll over or maybe consolidate right around here and then go lower? I don't know. I still think that we have a little bit ways higher, but for anybody looking to get a deal done on a home, for people who are really, really focused on getting a good interest rate, well, the average 30-year fix now is below 7%. Okay, this is, where are we at now? I want to make sure I stop and give you guys some good shots of the buildings here, just so you can see an interesting contrast between Midtown Manhattan, Billionaires Row, and the really beautiful brownstone style buildings that we have here on the Upper West Side of Manhattan. But for home builders, if you have 27% margins usually, again, they don't want to be sitting on inventory. So if they can give up a couple points to close a deal, I think they will. And from the earnings report, it seems as if that's going to be the case. Now, this is actually my personal favorite neighborhood. So I always say, if you guys are looking to move to New York, especially if you have kids, in my view, the Upper West Side is really the place to do it. Specifically, I would say between 68th Street and 90th Street. Very quiet up here. You're not going to get the crazy hustle and bustle of Midtown, and not a lot of tourists either. I would say after about 8 p.m., the Upper West Side is kind of dead, and that's actually kind of nice. It gives you a feel of having a little bit more space in Manhattan. Additionally, you live in between the two greatest parks in all of Manhattan. So if we continue to walk east, past Columbus Avenue, you're going to run into Central Park, right? You're living right on Central Park West. However, a lot of people don't know this. I mean, obviously all the New Yorkers know this, but if you continue to go towards West End Avenue, which is this way, you're actually going to head into one of my personal favorite parks in the city, Riverside Park. And Riverside Park is absolutely gorgeous. It's right on the Hudson River. Very quiet, not a lot of tourist activity. And you have the best of both worlds. So let's say if you live right here, West 69th Street, you live in a beautiful brownstone, tree-lined block, very quiet. You can take your dog for a walk and go to Central Park, or you can go to Riverside, whichever one you want. Hey, Noah Joseph is here. What's up, man? So Noah Joseph, if I remember correctly, you are from Cali, but you made your way over to New York, right? Brooklyn, if I remember correctly? I usually tend to have a pretty good memory, but yeah, welcome, dude, to New York. We're happy to have you here. Thank God you're here. My God. Now, the media hyped up this big snowstorm and that we're supposed to have. It's not even snowing yet. Or it stopped snowing, I should say. Check this out. Gorgeous night sky here on the Upper West Side. A lot of vacant real estate fronts for retail. Sabrina Fair, welcome. Now, if we want to go down and break it down by category, once again, if you type !CPI in the chat, you'll be able to follow along with me. If you go to table A, it's about 25% of the way down on the sheet. But food, the whole category of food was up 0.4% month over month and 9.5% year over year. That is significant. And we had a conversation yesterday. You know, I told you guys, usually I do my grocery shopping in Miami because, you know, let's face it, when I'm in New York, I never really have any time to do any cooking. So I tend to eat out a lot, which is almost just as expensive now as eating in. And so if I buy a couple New York strip steaks, a couple bags of frozen vegetables, and a few other things like, a carton of eggs and milk, I'm walking out of there spending like $70. It's ridiculous. So, you know, sometimes we can get so caught up in the data, right, crunching the numbers. But I think it's easier just to look around, you know, pay attention to what you're doing in your everyday life. You know, is food still expensive for you? Are you seeing prices finally start to decline? You know, again, in the CPI report, we saw food prices accelerate. And again, in my budget, I spend the vast majority of my money on my mortgage payment, so shelter, and food, by far. Speaking of food, this is actually a pretty good restaurant I'd recommend here. It's called Parm. Very good. Well, I shouldn't say very good, it's good. It's good. It's a solid place. Also, the building that it's in, it's very nice. Very classic brick buildings here on the Upper West Side. Now, this is a really good shot to show you guys the contrast that I'm talking about. Notice all of the old buildings here on the Upper West Side, and then you'll see exactly where we came from. You could see Central Park Tower towering over everything. It's such a massive building. It's almost like you're in two different cities at the same time. It's actually kind of cool to see. I think as we continue on our walk up to 72nd Street, we'll see the Dakota apartment. We'll have a better view of that. Hey, J9 is here. Welcome. Oh, Noah Joseph says, I never made it, got hurt in an accident real bad. Holy crap, man. And financially destroyed, trying to make a comeback, though it's rough. Dude, I'm so sorry to hear that, man. Best wishes for your recovery. And never give up. If your goal was to come and live here, no matter the setbacks, you'll find your way here, I promise. John says some prices are down and there are still shortages on very specific items. So what shortages are you seeing? I'm not really seeing any shortages, at least in the items that I buy, but I'm noticing that it's very, very expensive. So I'm not noticing shortages, I'm just noticing things are expensive. But food at home, right? So if you look at the food category, it's broken down into two distinct categories. Food at home and then food away from home, right? If you're eating out, dining, things like that. So food at home is up 0.3% on a month-over-month basis and 10.2% year over year. And I always think about this because if you're buying groceries for one person, I just told you I bought a couple steaks, some frozen vegetables, eggs, and some milk, and it's like $70. I could only imagine trying to feed a family of 5, right, what the grocery bill would be for that. I mean, unless you're going to Costco and buying in bulk, I could only imagine what the prices would be. So for people to say that inflation is really not providing a pinch to the average American, I don't know. I would probably have to disagree with that. I mean, I've noticed it, and I really never pay attention to prices. Now, if you think about food away from home, that was also up 0.6%, almost 1 percentage point on a month-over-month basis, and 8.4% on a year-over-year basis. But I want to touch on this subject a little bit because I was walking around the Time Warner Center today. Excuse me, the Deutsche Bank towers. I forgot Deutsche Bank, a German bank. Actually, it's the towers it's named after now. And every single restaurant in the Deutsche Bank tower was absolutely packed to the rafters. You know, I was going to get dinner at this place called Momofuku. It's a very good noodle bar there. And we actually couldn't even sit. We couldn't even get a seat. So we actually had to go somewhere else. And I wanted to really hammer home on this because it seems as if the American consumer is so freaking resilient, right? If you have a month-over-month increase of food away from home of 0.6%, an annual basis of 8.4%, you just had a cataclysmic bank collapse, okay, that scared the hell out of everybody over the weekend. And on a Tuesday, almost every single restaurant in Manhattan is booked and packed, at least the ones that I was trying to go to tonight. What does that say about the resiliency of the American consumer? And again, I always like to, oh, look at these buildings, guys. Look at how beautiful that shot is. This is like a classic Upper West Side shot here. I wish it was snowing a little bit, so it may be better on the optics and the visuals for you guys. But, you know, I really want you guys to think about when we do the live streams in Miami, right? We're streaming in South Beach. We're streaming in downtown Miami and Brickell. And it was a Tuesday night. Now, granted, it is March, okay, so usually there's more tourist activity in Miami, but the restaurants are packed. They are packed. And I could tell you with certainty, okay, walking through Midtown Manhattan, Columbus Circle, this is the first time I've been to the Upper West Side in a while. People are out. People are spending money at the restaurants. And I think this is it's still, you're seeing the tail end of effects of people trying to make up for lost time. That's really the only thing I could think about because, you know, during the Big C, you know, you were told to, you know, stay in your home, don't see anybody. And I think people are making up for lost time. I don't know. Am I off base there? And are you guys, wherever you live in the United States or the world, are you seeing the same thing? Are you seeing similar things in your neck of the woods? Are restaurants packed in your city? Ken Glass says, Tom, my family of 5 was $230 a week. Now it's $370 plus. Sam's Club twice every 30 days. Wow. Yeah, and I mean, and Ken Glass, that actually sounds pretty cheap. But I think the reason, and the price increase is insane, by the way, on a percentage basis. But, you know, if you're shopping at a place like Sam's Club or BJ's, you're probably going to get better pricing because you're buying wholesale, right? You're buying in bulk. You know, if you just go to the regular grocery store, you're probably going to get fleeced. But, you know, I don't doubt it, man. That's incredible. That's almost a 100% increase. Hey, J9 says, Tom, I live outside of College Town, and the restaurants have definitely been more packed the past few months than they were before. Nav0407 says, yes, Ontario, Canada, very much. Paul says, movie theaters near me definitely have a lot of people. Yeah, I mean, talk about resiliency, my friends. It's really incredible. I want to point this out. We are now on the corner of Central Park West and 72nd Street. And this is the very famous Dakota building. This is the Dakota Apartments. It is an absolutely gorgeous building here. And if you notice, this is the main entrance. You can see the original oil lamps right here. Hey, Steph UH is joining us. Good to see you, Steph. Hang with Mark says, Tom, Disney parks are packed to the gills and sold out. Disney Springs restaurants are packed with tourists. You know, we heard from Disney. When are they reporting earnings next? I think they actually just reported for the quarter. I think about 98% of all the... Wait, is that snow? Look at this. Guys, how funny is that? This guy has about maybe 5 inches of snow on his car. Now, I guarantee he probably drove in from upstate New York, right? But that's funny. just goes to show, usually here down in the tri-state, we never really get any snow, but upstate New York is getting bombed with snow. It's kind of funny to see him drive all the way down, probably a 2.5-hour drive with 5 inches of snow on his car. But here's a little bit better view of the Dakota. This is very famous for all of our Beatles fans out here. This is unfortunately where John Lennon passed away, right here. I believe he was shot right in this doorway here. But my favorite thing about this building is these oil lamps that you have right here. How beautiful is that? Now, I guess you could call this architecture a Gothic style architecture. Wow, that apartment is amazing. You could almost see inside. Everything is that really, really deep, dark, sort of like red oak. I think one of the things I like the most about these older style buildings is the original libraries, the original built-ins. Would you guys agree? Hopefully I'm describing that well. But they have these original built-ins, right? Like the built-in libraries where you could put books and things like that. Really gorgeous. Hey, Golden City. Good to see you, my friend. But if you look closely enough, you'll see all the wood trimmings and the moldings and the chandeliers. Really nice. But what I was going to say is, Disney, the CEO of Disney came on the conference call, and from my understanding, they still don't have the Disney parks at max capacity yet. So could you imagine if they actually open up the parks to max capacity, how much more money they would make? But then again, we did have a commenter, I think it may have been TD, Teresa Diaz. Here's another look at Billionaires Row from up here, saying that they don't want to have 100% capacity at the parks because it would just be way too crowded and it would deter from the experience, which I guess makes sense, but it's crazy. I don't understand. I mean, these consumers are very, very resilient, and for everybody who's calling recession and Armageddon, I mean, at least it doesn't look like that yet. I mean, unemployment is still at 3.4%. Now, what I do think is that we're going to slowly and gradually start to see unemployment spike here. We just had big news coming out of Meta, ticker symbol META, which is formerly known as Facebook, Mark Zuckerberg's company. He is going to lay off, I think, the exact same amount of employees as he did last year. That would equate to about 11,000 more jobs lost. But Mark Zuckerberg has been getting intense pressure from the board to really focus on profitability and cut costs. Because if you remember correctly, on the last conference call, there was so much money being poured into the metaverse, which may or may not pay off. I guess you can consider a lot of that one-time investments. They invested in a lot of chips to really build out the metaverse and a lot of infrastructure for computing and cloud computing. But I think one of the things that they're going to do, or they are doing, is they're taking very close note of what other tech companies are doing, specifically over there at Twitter. Now, put that into perspective, guys. Elon Musk, when he took over Twitter, he literally fired about 80% of the whole freaking company. So if you don't think other CEOs out there, oh man, that wind is brutal. This is 432 Park Avenue, great shot of it. If you don't think other CEOs are taking note and saying, wow, if Elon Musk can fire about 80% of the employees and Twitter still operates just as normal, if not a little bit better, well, how much money could we save, right? And I think a lot of shareholders are putting additional pressure on that too. So I think you're going to see a second wave of tech layoffs. And another thing I was thinking about is a lot of these layoffs that already happened in tech. Many of these employees were awarded 6-month severance. So I don't believe they're going to show up in the unemployment rate. So unless they can find jobs quickly, I mean, it's been about 6 months since the first round of layoffs. I think that may start to show up in the unemployment rate. Hey, Brad's Brains. This inflation cycle will become a fascinating study for future econ majors. Post-coronavirus, inflation isn't the same, and we will learn this. I think you're right, Brad. I would agree. I would second that for sure. Brad, did you see Carl Icahn today on CNBC? He said something. He literally said what you said in the chat. If you didn't see his interview that he gave during the closing bell today, if you type !icon in the chat, I programmed the Nightbot to drop the link to the Carl Icahn interview. He was talking about inflation, and he also was talking about Citadel's Ken Griffin's comments about how capitalism is dying, which I kind of disagree with that. But one more shot of the Dakota, guys, before we venture further into the Upper West Side. Take a look at the built-ins. This is exactly what I was talking about. In a lot of these, older Gothic style or original brownstone style buildings here on the Upper West Side, you have all of this gorgeous architecture, these built-ins, which makes for fantastic libraries. My goal is to have a library that looks exactly similar to this. I don't know, I kind of like the, Stephen Schwarzman building, New York Public Library style architecture a little bit better than the modern, Billionaires Row style. Even though it is gorgeous in and of itself, I think this is a little bit more timeless, if I were to say so myself. Maybe I'll show you guys a little bit of Central Park. Hey, Dr. Longus, good to see you. Thanks for joining us. Nina, welcome. Steve CR says Kramer, he was pushing Silicon Valley Bank until the day before it closed. I saw something like that, right? He was recommending people to buy the stock or something like that couple weeks before the close. I saw something like that circulating on Twitter. Hey, Paul, thank you so much for your very kind $2 donation. I appreciate it. Thank you for supporting the channel. Beyond the Matrix is Robert Kiyosaki called the Lehman Brothers meltdown in 2008. Now he is calling out Credit Suisse. Yeah, I mean, I have mixed I think Robert Kiyosaki is a smart guy, but I mean, he cries doom and gloom almost every single day. But for you to make a prediction about Credit Suisse going under, I mean, it's not like, you're Harry Houdini, right? It's not like, wow, what a prediction. I mean, Credit Suisse is a $2 penny stock now. I think I actually put out a tweet about this weeks ago. If you want to check it out, you could follow us and stay connected at Walks Wall Street on Twitter. Real quick, this is Strawberry Fields I'll show you guys. For those non-New Yorkers here, this is the corner of Central Park West, 72nd Street. You have the Dakota right here. So if you want to see Strawberry Fields, all you do is you take a couple steps to the east, and then you go into the first entrance of Central Park you see. And I'll show you guys the main, I guess the circle here. It is very windy and cold. It's a pretty good idea to have the dog collar be all lit up. It's a pretty good idea. But yeah, I mean, Credit Suisse has a myriad of problems, and I would not be surprised if they need some sort of bailout or another company to take them over. But Credit Suisse, I think, is trading at like $2 a share. It is a single-digit penny stock. It's quite remarkable for sure. Now, here's the major Imagine logo right here. Now, usually during the summer and even during the day, everybody, you'll see a lot of musicians lined up all around the benches here. It's actually kind of nice, and they're, playing the Beatles music. Beyond the Matrix. This is Credit Suisse. Material weakness. Yeah, I mean, there's been, I think the largest shareholder in Credit Suisse have already dumped the stock. But a lot of, it's not just Credit Suisse though, guys. We've been talking a lot about Deutsche Bank. So Deutsche Bank is a German bank. The ticker symbol is DB, Deutsche Bank. And I wouldn't be surprised if we see some rumblings there. So just keep that on the horizon too. But if you guys are enjoying the live stream so far, feel free to leave a like on the video. Click the subscribe button if you're new. Share the show with your friends. We do these live streams about 5 days per week between New York City and Miami. And we'd love for you guys to join us here. But that is a gorgeous view of Billionaires Row here. It's awesome. Hey, Topper Bishop, thank you so much for your $5 donation. I appreciate that very much as we venture further into Central Park. Really quick, this building right here is actually One Vanderbilt. It's kind of cool to see it all the way from Central Park. That is 432 Park Avenue. But you guys know my favorite of Billionaires Row is this building right here, 157. That was the first building on Billionaires Row. So you see all these huge towering skyscrapers right here, from Central Park Tower to 220 Central Park South. The first one that kicked off this entire trend is the one with the big luminescent white top. Now, this building and Central Park Tower are both developed by the Extel Group. And I was actually on a call with Bill Ackman, right, on Twitter Spaces, and that's the beauty of Twitter. Anybody with an internet connection is completely free, can create a Twitter account, and you can connect with some of these smartest people and the brightest minds in finance. And I believe Bill Ackman still has his unit right here at 157. But yeah, so let's talk about some market action. We talked about the CPI report. Look, inflation came in line. I'm not too happy about where inflation is headed in the United States. Next week, they are going to raise interest rates by 25 basis points. That is what I believe. I think if they pause or they cut rates, I actually think that's going to send a very negative message to the market. I think that could cause pandemonium. Now, notice price action today in the financial sector. Charles Schwab rallying, a lot of the, I should say, regional banks rallying, getting a pretty nice bid. But if you notice the specifics, I should say the ones that had a little bit better price action than others, those are probably the regional banks that have a direct line with the Federal Reserve, or who are able to tap into that. I'll just call it bailout. I don't really want to argue over the term, but I think it's the market showing that it believes in the stability of this decision. Now, to play devil's advocate, I will like to say this, and we covered this already at the beginning of the live stream, but before I do that, I just want to give you guys a panoramic view of Central Park, because very seldom do we live stream from the park at night. So I'll just give you a quick 360 view of the park. Beautiful in here. Now, if you continue to walk down here, all the way up to about 86th Street, this is my personal favorite part of Central Park. This is the entrance right near the Museum of Natural History. We don't have enough time to walk all the way up there today, but maybe sometime in the summer when it's nice out, I'll take you guys up there. It is absolutely gorgeous. You know what? I'll let you guys decide. Should we go further into the park? Okay, should we go further into the park, or should we head back down Central Park West? I'll let you guys decide in the comments, and I'll sort of explain what I was going to say here. You know, could this be a Bear Stearns style rally? And what I mean by that is, you know, before everything, everybody's saying go back. All right, we'll go back. That part of the park is beautiful, guys. I mean, you're missing out, but we'll go back. You know, when the first, I would say, domino fell, JP Morgan Chase bought out Bear Stearns for, I think, $2 a share. Now, 4 days after the announcement, Stocks rallied pretty hard, about 4%, 4.5%. But then if you fast forward 1 year, the major equity indices, particularly the S&P 500, the Dow, and the NASDAQ, were all down over 40%. So if you look at the technicals of this market, specifically as we reviewed at the very beginning of the stream, the S&P 500 is still below the 200-day moving average and the 50. So is the Dow Jones Industrial Average. That is also below the 200-day and the 50-day moving average. The only major indice, guys, that managed to rally back above the 200-day is the NASDAQ, right? And obviously the NASDAQ has multiple, it's a tech-heavy index, right? Very high-growth tech companies. So I don't think we're out of the woods just yet. But the price action, it does actually kind of make sense when we break it down. It does kind of make sense. Because check out the whole entire yield curve today. So if you go to cnbc.com/bonds, here's another really good look of Billionaires Row from Central Park. Or if you have a Bloomberg terminal or MarketSmith or TradingView, rates have come down significantly. I mean, there's been blistering moves in the bond market, huge moves. That 10-year U.S. Treasury yield used to be right up against 4%. We're now at 3.5%, right? So you saw all of the yields come down at once, which is actually tends to be good for technology stocks, right? Because if you think about, running a discounted cash flow analysis, right, or building a DCF, usually, right, when interest rates go up, the present value of a company's future cash flows are worth less, right? And when interest rates are rock bottom, the present value of a company's future cash flows are worth more. This is a really good view of 432 Park Avenue. And we've seen the whole entire curve come down. So you're seeing a big bid in a lot of these high beta frothy tech stocks. But, if I'm a betting person, I would say that rates are going to slingshot right back up. I don't know, what do you guys think? Do you think that since we have this bailout operation from the Federal Reserve and the FDIC, do you think markets are going to turn right back around and go back up and break above, and S&P will break above 4,000? What do you guys think? Brad's Brain says, it's so depressing, the literal years lost in 401ks. It's going to take the Trump era type gains for a couple years to get all that back. Yeah, well, I mean, think about, and that's another thing, Brad. So Brad makes a good point. The S&P 500 now, I think, is off a little bit over 20%. Man, this is a gorgeous view. I think this is probably one of the best views we're ever going to get on Walks on Wall Street. Look at that. That literally looks like Gotham City, doesn't it? That is awesome. Even though, 401k balances are down significantly, right? 20% haircut. And inflation is ramping. We just went through line item by line item the CPI report. People are still out spending. People are still out going to the restaurants. People are still out staying in hotels. It's really crazy, the resiliency here. But maybe we're at the tail end of that as, they announce more layoffs, as maybe unemployment ticks up. We'll see. Hey, Joan K, this is a beautiful view. Real quick, right here, you can't really see it because it's so dark. This is called Sheep Meadow. And if you're not familiar with New York, I want you guys to Google that, because in the summer, this is one of the most gorgeous places to hang out in all New York City. So I want you guys to just Google Sheep Meadow Central Park summer, and you'll see what I'm talking about. It is an unbelievable place, really, really fun place to hang out. Unfortunately, it is closed for the season because it's so dark and cold and depressing out. But soon enough, the sun will come out, and it'll be 80 degrees and gorgeous. Oh, look at that. So this is the Trump International Hotel and Tower, and it looks like somebody bought the penthouse all the way at the top. I think that was on the market for like $45 million. It looks like somebody's home. That's so cool. I'm going to have to check up on that. But the building right next to Trump International Hotel and Tower right here is 15 Central Park West. And 15 Central Park West is a very significant building. One of the most high-profile buildings in the city. You know, as we're talking about Wall Street here, I believe the former CEO of Goldman Sachs, Lloyd Blankfein, has a unit in there. I think, you know, if we want to change up the subjects and go to baseball, Alex Rodriguez and Derek Jeter used to live there as well. Really beautiful building. Now, could anybody guess what this place is? Anybody want to guess? This is a very important piece of Central Park right here. Let's see if anybody knows what this is. Hey, Golden City. Quant's hilarious. Zozo Bob, you're correct. This is Tavern on the Green. Now, I think they actually closed down Tavern on the Green, but after COVID, they opened it, thank God. I mean, if this place ever closed down, that would be such a travesty for New York City. This is a really, really cool place, especially in the summer, really beautiful. If you have not been here and you want to come to New York City, I think you got to come here at least once just to experience it. Very cool place. All right, let's exit the park and then let's head back into Midtown. That's a good guess. A lot of people are guessing it's the Central Park Zoo. Good guess, but no. That is on the, I think that's on the east side of the park, not the west side of the park. Hey, Roberts, is this also the finish line of the New York City Marathon? You're right. Hopefully I'll be able to run the New York City Marathon very soon. You know, one of the things I want to do, or I was planning to do, is I'm going to run the New York City Marathon, but I'm going to live stream it. And I'm going to go into the YouTube settings and put it to donation. So what I think would be fun maybe next year, next November, I want to vote as a community. So I'll put a little poll up on Walks on Wall Street to which charity we should give the donations to. So I'll run the New York City Marathon, and any donations that people put in the chat will go to that specific charity. I think it would be kind of cool. I think that'd be a cool thing. So you guys could literally run the New York City Marathon with me. We'll see all the sights and the sounds. You guys could watch me suffer. And any donations will go to charity. I think that'll be cool. Hey, Mike C. says Tom will still be able to read 90% of the chats while running the marathon. Yeah, I don't think I'll be able to do that. I'll definitely read as many as I can. That's too funny. That's too funny, man. Running and reading all the chats. Hilarious. All right, so now we are here at Central Park West. We're officially outside of Central Park now. I'll give you one last view uptown. Now, we did cover the individual categories of CPI that were bad, right? But as the optimist that I am, I think it's appropriate and I think it's fair that we cover the specific categories in the CPI report that actually improved. The good news is the used car market, used cars, we're seeing significant deflation there. So on a month-over-month basis, used vehicles in America were down 2.8% month over month. That is very, very good news. Now, if you want to talk about on a per annum basis, so the year-over-year basis, used cars were down 13.6% year over year. Now, who remembers, and we covered this on Walks on Wall Street. Here's a beautiful church, by the way. Look at the architecture there. Very similar to St. Thomas Church, but not as good, but it still looks beautiful. Who remembers all of the crazy media stories and the news articles back in 2021 about these crazy bidding wars for used vehicles? Does anybody remember that? I was even reading some articles that people were able to sell their used cars for more than they originally paid for them. I mean, it was just so crazy. And that really just gives you a pretty interesting look into the times that we were dealing with supply chain issues, with shortages, and it's all coming undone, which is good for the American consumer. You know, assuming that you're in the market for a used vehicle, chances are prices are going to continue to come down. Yeah, Ryan Beck says, I remember that. Who here was able to capitalize on that? Is anybody here in the chat? You know, maybe you used to own a car and you bought it at one price and then you actually were able to sell it for higher than what you paid for it. Because you got to understand, if you buy a new vehicle, I think the statistic is once you drive it off the lot, it drops like 10% in value. Is that true? J9 says, yeah, my dealership was harassing me for my car, which was 8 years old. Jeez. I'm sure a lot of people cashed out on that. Hey, Beyond the Matrix says, I remember that. My son sells cars and he made over $250,000. Jeez, man. Well, God bless him, man. God bless him. More power to him. Two Wheel Freedom says, used cars, those poor people trapped in outrageous auto loans on cars that lose value every mile. That's another good point. If we want to talk about a recession, right, or recessionary, I would say, catalysts, the only sector that we're really seeing an uptick in defaults is on auto loans, right? So credit card defaults, or delinquencies, I should say, are just starting to ramp up, but there is some major concern, I would say, in the auto market for auto loans. That is true. Rat thinks as new cars depreciate right when you drive it off the lot. Well, here's the funny thing, right? I'll give you guys one more shot of 157. Such an awesome building, as well as the Steinway building. Now, you would think that since used vehicles and CPI fell off a cliff, right, so prices are coming back down, but new vehicles actually increased. Now, what this signals to me is that there's still a supply chain issue. Does it not? Now, I'm not an expert in cars, right? This is not my area of expertise. I don't own a car. I've never purchased a car. So maybe somebody who has a little bit of expertise, I think somebody in the chat just says their son works as a car salesman. So is that what they're seeing at these dealerships? Are new vehicles still hard to get? Is the supply chain still messed up that we can't even get new cars on the lot? I'd be interested to see some of the comments in the chat there. In the meantime, here is 15 Central Park West. Man, it is so cold out. JP says, do you know how to drive? I do know how to drive, but I don't drive. Brad's Brain says, Tom, I have a 2006 Mustang as a future hot rod weekend car, but that thing is worth 17 to 18 grand during the run. Insane. Wow. So would you be interested in selling that, or do you think you're just going to keep it for, you know, your weekend car? Wow, Matt says, my Corvette Z06 is $100K over invoice. Jesus. Adrian says a car is written off in 10 years. That's then it's what someone wants to give. Interesting. Jeff W277 is, I really should have sold my Cruze or Chevy Cruze during the worst of the pandemic. I barely drive it. I only drive it to the suburbs. I can go 2 weeks without a car. Interesting. Yeah, I mean, if you live in New York, I mean, there's really no reason to get one unless you have, maybe kids. But it's just a pain, guys. It's really a nightmare driving in the city, in my view. Dave says, Tom, anything German worth owning is still 50% over Kelly Blue Book value. That's incredible, man. Yeah, I don't know. So, I mean, to me, and maybe, as we, maybe there'll be some statements made from some of these auto OEMs. To me, if we're still having new vehicle prices go up, to me, that means two things. Consumers are still spending, they're still buying new cars, and there's probably still supply chain issues, specifically with chips, right? Because if you think about, it looks like somebody's home in the penthouse here too. I think that is the duplex. It's a 2-floor penthouse at 157. I can only imagine the gorgeous view of Central Park in there. My God. Because if you think about EVs, and as we're talking about an EV, there's a Tesla right here. Perfect timing. If you think about EVs, there's about twice as many chips, or I should say semiconductors, that go into electric vehicles than regular cars. So a lot of governments, and I don't really want to get into the politics of it, everybody. I think we understand the debate, and we could fight it till the cows come home on the stream. But governments are obviously pushing us in the direction that they want people to buy EVs, and they want auto OEMs to manufacture mostly EVs. And if that's the case, well, there's going to be a huge run on semiconductors. And there's actually been some data that came out that said if we were, right, in theory, to meet the demands, I'm saying demands a little bit facetiously as it relates to the government and this big EV push. If we were to meet the demands of having all new cars in America be EVs that are sold by 2030, we wouldn't even have enough. It would be impossible to mine all the raw materials to build the specific batteries that go into these EVs. And I brought up a very, I think, good point that's, in my opinion, is a little bit hypocritical to these ESG pumpers out there, because where are you getting the rare earths that go into these electric vehicles? You're getting them from Africa. You're exploiting all of these people, specifically the Democratic Republic of the Congo, when you have the vast majority of the world's cobalt being mined there with slave labor and child labor. So I think it's very important that all of these ESG people understand that just because an electric vehicle shows up in the United States, you really got to audit the process of how it's put together, so you're not exploiting people in other countries, and you're not feeding into these warlords in other countries that are abusing their people for slave labor. All right, let's walk back to 57th Street, and then we'll make a left, or maybe we'll walk down Central Park South a little bit. We talked a little bit about Deutsche Bank today, and this is the very beautiful Deutsche Bank towers here. Now, I'm all for EVs, by the way. I've actually been a huge supporter of Tesla since the early days. I just think we need to be doing it in a way that's sustainable and not, these hyperbolic statements by politicians. Because if you do that, it's going to mean very bad things in other countries. Michael Joseph's Silicon Valley Bank was promoting ESG. Well, that's across the board. You kind of do, right? So ESG is a very slippery slope, right? Do I agree with the premise of ESG to, treat people equally and be inclusive and be a good person? Of course. And everybody does, right? You'd have to be a sociopath not to. But I really think a select few individuals have really bastardized it into, going overboard on it and just solely focusing and really trying to take it to the max. But the normal principles of, environmental and social governance, I think everybody agrees with it. But it's when you have a very select group of people trying to spin it and twist it for personal and political gain when it gets corrupted. And unfortunately, that's what I think it's gone to. But the premise of it, I think obviously everybody agrees. We want to be more sustainable. We want the environment to be protected. And I think the United States is the gold standard for that. The problem is, if you really care about the environment, which I do, I care about it a great deal, you actually need to get buy-in from other countries that are probably going to have larger economies than the United States, such as China. And right now, China is building more coal power plants than any other time in its history. So if it's going to work, it needs to be a concerted effort globally. It can't just be, a few Western European countries and the United States. It really has to be a concerted effort. Oh, Brad's Brains is another reason I'm keeping the Mustang is in response to future EV world. The new EV Mustang actually looks kind of cool. Now, I said this before. If I was going to buy a car, which I'm not in the market to buy a car, I'm probably never going to buy one unless, I have kids or something, it would probably be a Tesla. I mean, those things are just so cool, especially with the Model X? Is it the Tesla Model X that has the gull wing doors? Those are amazing. So I think if I were ever to purchase a vehicle, I think it would be an EV and it'd be a Tesla. But I think Ford has what is it called? The Mustang Mach-E, I think. That actually kind of looks cool too. Now, Rolls-Royce, and we had this conversation when we talked about LVMH, right? So LVMH is coming off the back of one of their strongest quarters in history. So if you want to talk about, consumer spending being very resilient, I mean, just look at a company like LVMH, which tends to cater towards more, I should say, upper middle class and then high net worth individuals. They're doing amazing right now. But Rolls-Royce, I think they actually announced that they're going to be manufacturing a Rolls-Royce Ghost EV, I believe. And I think it's already sold out and they didn't even start to put them into production yet. Did anybody else hear that? Did anybody else hear that Rolls-Royce is coming out with a full EV? I think Lamborghini said the same thing too. But I'm not a car guy. It seems like the people who buy Lamborghinis buy them because of the loudness of the engine. I don't know. I'm not interested in cars. I have no idea. I don't know if that would work out. Oh, Toby Sanchez says, Tom, you have a Toyota. Copy that. All right, so now we are outside Carnegie Hall, 7th Avenue, 57th Street. Jeff W277 says Ford has a Mach-E, but most of their money comes from the Ford F-150 and F-150 Lightning. Ah, that's right. Hey, Paul Oliver says, I'm Team Lucid. You know, I've yet to see a Lucid vehicle on the streets of New York. Now, we've seen a couple in Miami, and right outside of the Brickell City Center, there's actually a Lucid. I don't know if you can call it a dealership. I would say more of a showroom. But I've yet to see a Lucid or a Rivian. Now, the Rivian cars are kind of cool, and Amazon, I think, has a pretty big stake in Rivian, if I'm not mistaken. Or did Amazon sell off their stake in Rivian? I forget. Andrew says, Tom, do you have a car? I don't. I do not. I think I'd be most excited, though, if I ever saw one of the big Cybertrucks here in New York. That's what I'm looking forward to the most. Brad's Brain says, I heard about Lamborghini, but not Rolls-Royce. Also, Tom, the new Mustang is EV. It's pronounced Mach for reference. Thank you so much. I wonder how that's selling. Have they disclosed any sales data for that? For the new EV Mustang? Now, is it true for all of those car guys and girls out there that EVs by nature will always be faster than traditional internal combustion engine vehicles because all of the horsepower goes directly to the wheels? Is that correct? Because in a regular car, some of it gets blown off in the engine, but in an EV, it just goes directly to the wheels. I saw that, I think it was in a Bloomberg piece on Tesla. They were doing, and this was, I think, when the, what's it called? What is the fastest Tesla called that came out, the Roadster? I think Bloomberg was attending an event where they're doing a speed test in terms of 0 to 60 for the Tesla Roadster. And the guy was explaining, I think it was like a Tesla engineer was explaining it that way. Joe Drivers is off the line. Yes. Brad's Brain, so it's quicker, much more torque. Interesting. Jonathan says it doesn't have to build up speed. Oh, Walking Minnesota, you're right, the Model S Plaid. I did see that too. Jay Leno was trying it out with Elon Musk. Brick Stonewall says, Tom, you walked right by a Lucid a couple streams ago, parked on the street, and didn't even notice. Really? Dude, that's crazy. I didn't notice. I mean, maybe because it's just too cold out. I didn't notice. But in Miami, we see them all the time. Two Wheel Freedom says Lucids are wicked slick looking, but too pricey. Yeah, so what is the MSRP on a Lucid? I would guess $100,000, right? Now here's a question. How many people in the chat own an electric vehicle or own a Tesla? Loyal says, Tom, I raced a Tesla in my Viper. He crushed me. So who makes Viper? Dodge Viper? You guys are making me want to take one of these Tesla taxis back to Penn Station. Yeah, Two Wheel Freedoms is $100,000 and up. Crazy. Man. You know, over time though, technology in and of itself is deflationary. So I think and that's the whole point of the business model of Tesla, right? They have such high gross margins that if they can continue to get these factories up to full capacity and really start to sell through them, they can lower the price significantly, right? Anytime you have a new technology, the prices are going to be really, really high, really elevated. Oh, a lot of people are owning hybrids too. Sam M says, Tom, I own a hybrid, but not plug-in. Clarence Jackson says, great cars. Brad's Brain says, Tom, I'm not anti-EV. I'm like you. I'm anti-forced to EV soon. Yeah, that's true. Yeah, I mean, the biggest thing for me, guys, is, again, I would buy an EV, but I think it's going to take some time especially in the United States, for the infrastructure to support mass adoption for EVs, because our country is so big, right? So if you have like a 200-mile range on a lot of these cars, or a 300-mile range even, you're going to need charging stations everywhere, and that's going to take a lot of time to build out. But guys, I got to run a little bit early tonight. I got a meeting really, really early in the morning back in Manhattan, so I got to make sure I get some sleep. So if you guys enjoyed the live stream tonight, feel free to leave a like on the video and click the subscribe button. Subscribe to the channel if you're new. Share the show with your friends. Once again, tonight's live stream was talking about the inflation, the CPI data. If you type CPI in the chat, it'll drop you the direct link to the Bureau of Labor Statistics CPI report coming in at 6%. Also, we talked about Lennar's earnings report. If you type LEN in the chat, the Nightbot will drop the press release for their earnings. If you want to be on the conference call, I will be on there as well tomorrow at 11 a.m. The CEO will be discussing their Q1 results. So everybody have a great night. We will see you back here live from New York City tomorrow at 8:30 New York time. So Joseph Hardaway, thank you so much. Liz M, Palmettis, appreciate it. EM, Sabrina Fair, Ryan Beck, Nina, Chinook, Gigi NYC, The Investigator, I appreciate you very, very much. You're too kind. Lemonade, TC, Wendy England, Andrew Calhoun, my God, what's up, man? Good to see you. God bless you and your family. Hopefully you guys are all good over there in Australia. Always a pleasure to see you. That really made my night. And to the Mighty Bull, have a good night wherever you are, because there's always a bull market somewhere. You just need to know where to look, and I will see you guys right back here tomorrow at 8:30. Take care.